Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, December 9th, 4:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're under an attempted rally since Monday, the 6th. When the low was put in Friday and a gap up on Monday morning. You check over here the trend gauge, though, not everything is all happy rainbows and butterflies. Market leaders showed some promise early in the week. A lot of them pulled back hard yesterday and today. We'll take a look at some charts here momentarily, so we're still neutral there. Short term, while we've got the big indexes above the 21-day moving average, which we use to track short-term trend, mid caps and small caps continue to get hit hard, and are far below their key indexes. So we've got yellow here on short term, although the arrow is pointing toward green because we more heavily weight the Dow and the Nasdaq 100. But right now we're putting in a flag in those indexes. We'll take a look at that in the charts. Medium term, still showing green, although again we're lagging with mid caps and small caps. Long term green, can't get back above the 200-day moving average in the small caps though. Why do we track these, the major averages? Because 75% of stocks will track the overall trend of the market. However, this is quite a bifurcated market. There's a lot of big cap stocks holding up the indexes. The average stock is getting hit pretty hard. That's why you see the difference between the medium and long term being bullish and our leaders being neutral, and short term also. But we're going to take a look at a bunch of charts tonight. This is a Chartapalooza edition of the Market Insight video, and see what conclusions we can come to. So what happened today? Week open, we gapped down about 1/3%, and just not a good day. Bled all day long into a little bit of an attempted rally midday, but then we bled into the close and closed at the low of the day. And really taking the brunt of it was our beloved G5 Growth 5 index ETFs that we track. G5 down 3.04%, S&P 500 down 0.7, Nasdaq 100 down 1.5, Dow essentially flat. This was the safe haven today. Mid caps down 1.5, Russell 2000 down 2.3. In-house, we lagged the S&P 500 slightly, down a little bit worse than the 0.72%. But considering how bad growth stocks got hit, we're gonna count that as an acceptable performance, because we haven't been getting the green light that we want to climb back in to our preferred types of stocks. So right now we're heavily weighted toward large cap techs like Apple, Qualcomm, NVIDIA, and also the Nasdaq 100 and the S&P 500. We've got very little exposure to growth stocks. I'm going to go over the portfolio tonight as part of the chart. So let's go to the market facts now. But before we do that, let's take a look at the team here at Revere. If you're interested in a fiduciary, in other words, somebody who's got your best interests at the forefront of their approach, give us a shout. We're not a broker. That means we have no products to sell you. We don't collect commissions off of you, just a fee on the assets that we manage. And if you're interested in this approach, totally conflict-free, totally transparent. We do videos 5 nights a week in a podcast talking about the market. And want to hear more, give us a shout. You can email any of us, Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. So let's dive into some facts here. Fear and greed index at a 33, that's showing fear. Put call ratio elevated but not extended. So from a sentiment standpoint, people are recognizing that this isn't the best of markets. We're still hanging on to the bull case above the 21-day and 50-day moving average on the S&P 500 and the Nasdaq 100. Coming in today, I was looking for a low volume consolidation, working off the big gap up on Tuesday. Didn't really get that though. G5 lag, not a low volume consolidation. Really a harsh pullback. And again, we'll take a look at some charts here momentarily. Weak at the open, growth weak, and got weaker as the day went along, bled into the close. There was a very low jobless claims number before the open. And as I said, we did gap down, close lower. On the portfolio side, just two tiny adds to our portfolio today, Qualcomm and Roblox. Our exposure is 1.25%, which means 25% more risk than the S&P 500. Bonds led today along with the defensive sectors, staples, utilities, and healthcare. Home builders continue to act well, and transports relatively strong. Did finish red, but relatively strong. On the weak side, gold, silver, and silver stocks continue to just look terrible. Oil's weak today. Semiconductors, software and cloud stocks, biotech, and crypto weak today. So key level. These are the numbers that you want to watch. And let's go over here to the S&P 500. Let me blow this chart up a little bit. So here you can see we consolidated along the lows near the 50-day moving average last week. Nice day up on Monday, but we couldn't get above the 21. But the big gap up was on Tuesday. I think I might have said Monday before. It was on Tuesday. And now we're just consolidating that sideways. This looks fine as far as the overall indexes are concerned. Key levels. Okay, we're at 44.67. Let's go back to our chart here. So 44.67. This resistance area, let's go to a 30-minute chart here. We can't get over this 4,700 level. This was as we were trying to get to all-time highs in the middle of November. This was the area that we constantly ran into resistance at, so really 4,700 and a little bit higher, and that's what's capping this rally now. You can see the late day sell-off into the close, but so far we're holding this gap up from Tuesday, and that's a very key area, this 4650 to 4652 level. And note back here that acted as support back in November, 4652. We got above it one day here, back below it the next day. Tried to get above it on December 1st, failed miserably. Gapped back up above it on Tuesday, and then ran into the resistance. So really we're in a tight range here, 4650 to 4700, and we want to see who's going to win. Basically, that's what we're holding on to. It could go either way. As of right now, consolidating above this 4652 mid-November support level that I mentioned. Very key that holds. The 21-day exponential moving average is coming up quick to that. We're at 4631. That's the next level down that we want to keep a look at. And then we've got the 50-day moving average, which was broken last week twice, but we got back above it with the gap up on Tuesday. All the way down, the 200-day moving average, we're 8% above. And again, the market never gets into serious trouble unless we close on a weekly close below the 200-day moving average, which is down at 43.21. So let's move on to the other indexes. Here's the Nasdaq 100, very similar to the Dow, holding on to this 21-day moving average, 400 here. Very strong resistance. We can't get back above that. Bulls want to see us break above that. So really very similar. Today's highs and lows, 400 and change on the Nasdaq 100, the low 393. So let's say 390 to 400 is this key area on the Nasdaq 100, just like 4650 to 4700 is on the S&P. Keep your eye on those levels. Stock will take their cues accordingly from what happens there. Here's the Dow. See the Dow strong outperformance on Monday here versus the other indexes, and then the gap up on Tuesday and just trading in a very tight range. But this is certainly where the money flowed into today. Finishing flat was a win on the day. Now let's go to mid caps. Can't stay above the 21 and the 50, above it for 2 days, back above it today after holding the 200-day moving average, but that's not what looks the worst. Small caps is what by far looks the worst. Tried to get above the 200 and failed again at it. So now let's go through our G5, led primarily by IWO. This is the Russell Growth. Again, terrible relative strength recently on this. In fact, the relative strength is going to make a new low before price does on this, and that just means small growth stocks are not leading, and we really haven't gotten involved much with them since we had the big gap up on Monday. We pretty much were sold all out of them by last Friday and Monday. Took a couple of nibbles on Tuesday and Wednesday, but it's really not paying off at this point. Tight stops as always. So there's IWO. Let's look at FFTY. Another component, terrible, back below the 200-day moving average. QQQJ, this is a mid-cap Nasdaq 100 back below the 200-day moving average. PDP, this is a Dorsey Wright Momentum ETF, the strongest of them, but rebuked at the 21-day moving average back below the 50-day moving average. And then last year's darling is this year's I don't know that I can even qualify a ugly enough adjective for this, but ARK-K, just terrible. 19 relative strength. That means that 81% of all stocks that are in this master list here at MarketSmith are outperforming ARK-K. When you don't get a good growth stock picker, as Cathie Wood is purported to be, although she's been averaging down in a bunch of losing charts lately, which is not certainly not a strategy that we espouse to, but we do track this as we keep our finger on the pulse of what's going on in growth stocks. So those do not look good. That's the summary there. As far as the key goes to the overall market, I mentioned we're weighted heavily in Nasdaq 100 and S&P 500 as long as we stay above the 21-day moving average on those two indexes, the S&P 500 and the Nasdaq 100, will maintain the exposure that we have right now, slightly more risk than the S&P 500. So let's take a look at the things that we did add this week. We've got a less than a half position in Roblox, and that's holding above the 21. QCOM, we bought this twice this week. We're about flat on it. Ugly reversal today, some very nice strength early, but all semiconductors reversed. They've been leading the market really recently, and they pulled back a little bit here. We did buy some Zim, ended up adding to it. When it tried to break out, it reversed. We've sold half of it. It's sitting on the 21-day moving average, very close to our stop on that. And those three, Zim and Roblox, are basically account for pretty much all of the growth exposure that we have. We also own ANET, a networking stock, but not a go-go growth stock. It's got slightly more risk than the Nasdaq 100. That had a good day today. I mentioned NVIDIA. That did not have a good day today. In fact, closed below the 21. And we also are still in Apple. And this is very clear a market leader. So let's switch focus now to rebuilding the 21 over 21. So I mentioned the 7 survivors and from last week's 21, and these are still looking very good. BLDR, a building and construction stock. New, which is a steel stock, the leading steel stock. Undercut but reclaimed the 21 by the close today. Pure Storage, this is a new leader, acting well, holding up pretty good. Near all-time highs. Qualcomm, I mentioned we added to that this week. When we went to add some exposure, we went to the survivors of the 21 over 21 list, which were Qualcomm, Roblox. Again, we talked about adding that, and Zim. Zim with the pullback, like I mentioned, and the number 7, which we already owned and added a little bit to, is NVIDIA. So those 7 were the survivors from last week. Now let's talk about what absolutely got booted out because of poor price performance. We'll start with Unity Software, below the 50-day moving average. You're going to see something in common with all of these, and that is they're below the 50. The 21 is rolled over, and it's approaching the 50-day moving average. And also, these are primarily growth stocks that were prior leaders, but they're not leading right now. There is 6 of these that were taken off the list. One of the 6, Lulu, up after hours on earnings. Let's see how Lulu reacts tomorrow to see. Actually, now it's down on earnings. It was 426 when I last looked. Now it's 408, down 2%. So Lulu, one that got cut that is not a tech stock. Net taken off the list. 21-day rolled over, under the 50-day moving average. Zscaler, another one, looks very similar to Net, not so good under the 50-day moving average. Etsy, this is one that held up very nice initially, back up here when the market was getting challenged in mid-November. In fact, it tried to make new highs, but that rolled over sharply. Moral here is don't stick with the stock or a story. Observe the price action and stick with that. Can't get back above the 50-day moving average. And finally, Silvergate. Crypto's been under some pressure lately. Silvergate even more so. So those were the 6 that were eliminated from the 21 over 21 list. Then there were 8 that were, we'll call those 6 that we just talked about the ugly. I showed the good. Those were the 7. How about the 8 that were, we'll call them the bad, although they're not ugly, they're not good, so we'll go with bad, with a hat tip to Clint Eastwood. So these were below the 21, but above their 50-day moving average. So let's call these, semi-survivors. They're still on our watch list, and most of them, when they tried to rally back above the 21-day moving average this week, were not able to get back above it. So a couple of them have been, but 6 of the 8 have not. So we'll start with AMD, then we'll go to DDOG. Kept it on the list, was able to get back above and closed right on the 21 today, and John Deere. Struggled a little bit after earnings, but showing some relative strength over the last week and a half as industrials are holding up pretty well, back above the 200, back above the 21. One not holding the 21, Devon, as oil stocks have been getting hit. This is a very clear a leader. If oil rights itself, I'd expect this one to do very well, but just below the 21 now. Closed the week below the 50 and the 21, got back above the 21, but now below it with a weekday in oil today. Enphase, this is a solar leader, but it's rolled over pretty much. You can see how harshly the 21, the green line, has rolled over, but it still is above the 50-day moving average. SBNY, bank's not doing so well lately. This one pretty tight, but the 21 has rolled over, and this is riding it down. TTD, another one. This one goes back and forth between leading and lagging. Harsh 4-day, 5-day pullback here, bounced off the 50-day. Nice back gap up on Tuesday along with the market. Actually made higher highs on Wednesday and Thursday, but then reversed at the Livermore 100 level today, closed at 94.50. I still like this a lot. Keeping it on the list, it's just below the 21 over 21. So those are the 8. So we had 7 survivors, 6 that were, those are the good. The bad, these 8 that are between the 21 and the 50, and the ugly, the 6 that I talked about that were eliminated. Now let's talk on the brighter side. 4 that are certainly going to make it into the 21 over 21 when Hunter does the update tomorrow. I'll be traveling, so he'll be handling the update tomorrow. Apple, we've held it for a while, over a year. Actually a year and a half, coming up on 2 years, and it just continues to lead the market. It's like acting like a money market fund, people just stuffing, going to the safety of Apple. Look at the relative strength over the last month on that. Ambarella, great survivor. Semiconductors are acting well. Big gap up on earnings, caught by the market, undercut but held the 50. Gap up, but near the close of near the low of the gap up day on Tuesday. Everything should be judged by the low of the gap up day, by the way. That was an inflection point. And those that are failing that are not the strongest of stocks, but this one's still holding on, and it's above the 21. Marvell, another one, great reaction to earnings and following through to the upside. Probably one of the top 5 strongest stocks in the market right now. And the last one that we own and bought this week, ANET, gentle pullback after the big earnings gap up to just below the 21, then got back above it. And now note, a higher high above Tuesday's high. Anything that made a higher high above Tuesday, since that was an inflection point with the gap up off the low, those are your leaders. Anything that's above Tuesday's high, you can see the stochastic cross on that also. Now let's talk about, I've got a bunch of other ones that are clamoring to get into the coveted 21 over 21 list. And again, the in-house team will finalize this today before the video tomorrow. Let's start off with something that is a little more mild to the portfolio. American Tower, it's a REIT, but they are in the cell phone tower rental business. Airbnb, not so gentle. This one's pretty volatile, but had a harsh pullback, but got back above the 21 and is sitting right there on it. ON, a semiconductor that continues to trend higher nicely since its earnings gap up. Live Nation, LYV, since we're reopening, back above the 21. Again, another one that had a nice earnings gap up, but then sold off along with the rest of the market after that. Micron MU continues to act pretty well. Sienna, big gap up today, trying to get on the leaders list. Look at the volume on that, 800% on Sienna, closed in the upper part of its range on a challenging day for stocks. Applied Materials also acting well, putting in a little bit of a handle. Three builder stocks that are acting very well. Toll is at the top of the list after its earnings yesterday and a day two higher high after earnings. Look at the superior relative strength here on these. Toll, the other two are DHI and also Lennar. So three home builder stocks continue to look pretty good. MongoDB, MDB. Let's take a look at it. Gap up on earnings, higher high day 2 and day 3. This was a very harsh sell-off on this, though, so this chart is kind of ugly enough to probably not make the final cut. Snow has showed some relative strength after a harsh, really a one-day sell-off on earnings, but back above the 50, back above the 21. Palo Alto Networks is the one that has really survived the sell-off in all of the cybersecurity stocks above the 21. NTR, an ag stock, chemical stock, fertilizer stock above the 21, looking pretty good. And let's see if I missed any or did I get them all. APP, shakeout on its offering, higher high after the offering, but reversed today at the 100 Livermore level. When the market is questionable, any reasonable area of resistance will probably continue to act as resistance. That's why Zim reversed on its breakout. App turned around at the 100 level today. TTD turned around at the 100 level today. The S&P 500 turned around at the prior resistance above 4,700. The Nasdaq 100 turned away at 400. That just means the market's not quite ready, but if it gets through that level, have your leaders list ready to pounce. And that's going to wrap it. As always, I'd like to hear from you. I'm on Twitter at @Vandenbord. Twitter has a big problem as far as I'm concerned. I don't tweet a whole lot because the more content you put out there, the more trolls you get, and then the more imposters you get. I know so many people on FinTwit that try to add to the good of the community, and then imposters try to duplicate their account. They change one letter in the name, and then they send DMs to people to try to solicit money from them. And Twitter doesn't seem to want to do anything about it. I've copied them on several tweets, but they don't care. All they care, well, I'm not going to get into a political conversation on this, but love the product, hate the way they're managing it. You can also email me, Don@RevereAsset.com, or phone 855-REAL-WEALTH. So wrapping up Thursday, December 9th, this is Don Vandenbord, the Chartapalooza edition, the good, bad, the ugly edition, telling it like it is. Thanks for listening. Have a great day.